George, Ernie, what's happening? I'll do a video real quick on this upper left-hand chart. We got a number 3 working for us right now. Another nice trade this morning going into 745. These 745 trades work really, really well. Remember, I wouldn't log in later than 7:30, 7:45. Typically, you're done by 9 a.m. in the morning. So really good way to start the morning on as far as crew goes. So let's go over the number 3 that's working right now on this setup. Why is this such an important setup right there at this level? Why is this such an important setup right at this level at 745? Why is this such a nice trade working right here? Anybody? We go over confluence all the time, but why is this working so well for us on this setup? All right there, this short, J signal short. It's with trend, but what's the confluence that's confluing on this trade? What's confluing on that short? The ATR is, isn't it? ATR and the price profile. Price profiles is a second retest, but you got a first test of the ATR. The one thing I want to go over this morning is the reason we use this chart up here. Put it right beside this, skinny this down. And I'll put this chart up. Gerald's going to do a video real quick so we understand how to use this chart. Very important. It worked yesterday too. Yesterday we had the same looking setup. Okay, this is an ATR chart in the upper left-hand corner. What happens is the market gets out of balance, or it gets the average true range, okay, is based upon, if you look at these dots right here, let's first go over the average true range. The market has an average true range where it should stay into balance at a certain level when it's moving vertical, meaning move vertical up or vertical down. It needs to get back in balance, meaning it can't get too far away from its average true range. Like you see how we get too far away from this average true range, it bounces back up. So I have these dots up here, these purple dots that shows me where the market should come back into balance and do a continuation with trend. The purple dots are the most important for an outer edge trade. The cyan dots are the most important for an outer edge buy. Okay? The key is this. The key is to let the moving average cross over to know when to look for an an ATR trade. And here's a really easy way to do it. Once you see the moving average cross over and you're moving down, you get away from these magenta dots. The first test after the cross is where you should have a continuation of trend. And you can see it stopped again almost to the exact tick on the ATR dot. It happened yesterday the same way. You're not going to get a lot of these ATR trades like this. You usually get about 1 to 2 a morning. They're great for trend. If the trend's hard down on your trend filter, these are great to use. Now, I don't suggest or educate that you buy and sell off the ATR by itself. What I do educate you on, the reason I have the chart in the room, is to play it with market profile or with J signal. The top trade you're going to have with this ATR is when J signal matches up with it. So if you get an ATR and you get a J signal that happens at the same time, and consequently this was a retest of the LVA, you got a very strong setup. The markets cannot get, like right now we're way out of balance. The market's way out of balance. It's going to have to retrace back up and touch the outer ATR, the inner ATR. Now there's 2 ATRs I have on there. You'll see 2 sets of dots. I have one set that is on the outer edge on shorts, be the purple, and one set that are red on the inner edge. I have one set that are green on the inner edge and one set on the outer edge on the buy side. The inner edge, if you get a J signal on the inner edge, okay, and you get a J signal, it could be a powerful move because it's a very shallow retracement. And I like to look at those when I'm first breaking out of HVA or LVA. So when low value or high value is first breaking out of and I get a shallow retracement and I get a little shallow, this is typically where you break LVA, HVA, you get a mini ABC. If you see that and you get a pull-in bar, that could be a powerful move. The outer edges are more of a full retracement that's in effect that the ATR should see a continuation. What do I mean by that? If you look here, we had a full retracement on the ATR after the cross, and you had a J signal that confirmed it. Whereas over here, I had a mini retracement that touched the inner edge ATR with a pull-in bar. So this is another setup according to the inner ATR. So right there told me that that should have a continuation of trend, that exact pull-in bar right here. Because it came back up, you had a mini ABC, came back up, and it had another continuation trade to the downside. All right, because it pulled yourself in as far as the inner dot. The inner dots are more aggressive, okay? I like taking them when you first only break through LVR HVA because it's telling you the market's really weak or really strong. So if you first break LVR HVA and you're not strong enough to get back up and get a fib dot, and then you get it pulled in, you must be resting on the inner ATR. I suggest if you're new to the trading room, you just take the outer edge ATRs with J signal. It's the best way to do it. But I'm just telling you how the overall average true range works on a shallow and a deep retracement, so you know how this works. I want you to understand why I have both dots on there. The inner dots, I mean the inner, not the outer edge dots, are for mini ABCs. The outer dots are for full retracement ABCs. So if you see a full retracement, if the moving average crosses over, right, and there's your dots, so you know what to look for, and then you get a J signal lined up right here with trend. That's a setup. There's your entry, exact bar entry where the triangle is. That lets you know you got a powerful trade to the downside. And I want you to pay attention to that because if you start watching for those, especially on trend days, you're going to get a really, really nice setups on a snapback trades. So remember, the inner dots are shallow retracements, like over here on the buy side at 5:15 this morning. That was a shallow retracement, right? So let's look at this. You're going to start understanding it. It's actually a little bit before that, right here to 5:25 or so. But if you look, this is that was a mini ABC. We had a J signal that gave us a long signal here. But look how the mini ABC continued it on the inner dot. So right there is the inner dot, the green dot that stopped the low. Now look at this. If you start watching this, your mind's going to be boggled how accurate this thing is. There's your mini ABC worked on the inner dot, right? And then got the pull-in bar. Here's a J signal for a full retracement. So if I would have got down to the cyan dots over here, that would have been a full retracement ATR long with the J signal long right there, okay? Just like here. So these two are the same setups. Now I want to show you so you understand this. This setup is the same as this setup. That'd be a full retracement ATR setup. Okay, these are two full ATR retracement setups. That would be a cyan. This one hit right on my ATR. Okay, this is a mini ABC that happened right on my green dots, my inner edge dots, with the pull-in bar. So you can see, you can really tell when the market is first crossing over. So you get really these ATR charts give you two shots at it, but you must get a pull-in bar either way. And I like the full retracement. So if you're new to the room, I would take the full retracements. Those are the best ones. I'm just showing you how it works. And this works on gold. It works on all markets the same way. You know, it works on gold the same way as it does crude oil on my ATR. Okay? So this is the average true range. So you get these, when you get these shallow pullbacks and you get a pull-in bar, that told you, like these two trades are the same. That told you, here's a mini ABC off the inner dots. That told you right there, higher. This told you right here with the pull-in bar, lower. All right, so it's a really good way to judge what the market's doing. And then here are your two great setups with J signal. So it gives you an extra opportunity, an extra chart to really qualify the J signal on what J signal is going to be the most powerful one. What's going to be the one that gives me the big giant move up, the big possible giant move down? Because this is a nice little short here, 64, you know, over $640 plus, $650 plus per one contract, just at 745. I mean, that's going to make your week. If you start doing this over and over again and getting these high reward to risk trades, where you're getting these $600, $700, $800 trades per one contract when you're risking $130 per one contract. This one right here, another 68 all the way to 30. You know, so you're getting another $700 trade, $650 trade, and you're only risking $130. So you got to put yourself in a high reward to risk. Start using this chart to do that. All right, the mini ABCs will be the inner edge, These are inner edge with a pull-in bar. All right, that's more an aggressive stance. If you get more experience as a trader, you can take those. If you have less experience how to work this, I'd wait for a full retracement with the J signal. All right? But beautiful setups this morning using that technique with the J signal again on the 3 sim. No more than $130 risk.